Hi, everybody. Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania. And you can see by my background, we have had a lot of rain in the months of May and June. And although that's good for my lawn, the problem is it's tough to cut your lawn when it rains that much. So we're bringing you the June update. A little bit, I try to make it the first of the month, but there's been a lot happening. So we're coming to you almost mid-month when you see this video. What's been going on? Well, we always like to start with a cartoon. It's a roller coaster market. I am calling this, and if you've watched some of my other videos, especially the Trade Talks video that we did a couple of weeks ago, I'm calling this the summer of the whipsaw. And what I mean by that is that if there's news that, hey, the US and China are getting together on tariffs, the market rallies, or hey, they're not getting together, the market declines. We've had 1%, 2% up and down days, literally the months of May and June so far. And I see it continuing because, again, we're looking at whether or not we have inflation or not, whether or not the tariffs are coming in, whether or not interest rates are going up. So I'm calling it the summer of the whipsaw. And you can see by this chart, the S&P 500, that when the whole tariff talk started back in February and March, we had a major decline in the market, almost a little bit 21.5% rollover in the stock market. It was very serious. Our risk indicators before that had been on defense. And sure enough, when we saw the low right around 48.35, our risk indicators, which had been compressed, turned around and we actually started putting money to work. Well, now that we're back up, you can see that we've also had a 24.5% rally. This is one of the fastest declines and one of the fastest rallies literally since 2020 during the COVID period of time. But all in all, the S&P 500 is only up 2.3% as of this video for the year. So big sell-off, 20%er. We've been looking for that in 2025. We got it. Followed by a big rally. We're a little surprised at the magnitude of the rally. It was led again by the Mag 7 stocks: Amazon, Apple, Netflix, Nvidia, Meta, Google, and Microsoft, Tesla. And actually, if you look at a chart of Tesla, and this is not a recommendation to buy or sell, but Tesla has really driven some of these averages, these growth averages during the recovery phase. And now we're back literally at 6,000, a little bit over 6,000 as of this video. So the question is, where do we go from here? Again, we think this is the summer of the whipsaw. And if there's any negative news, the market could quickly pull back 2 to 5%. People are going to be looking for the third quarter numbers as far as earnings go. We just came through the second quarter earnings. They were a little bit better than expected. But again, the guidance going into the third quarter has not been very good because, again, because of what's going on with the tariffs, these CEOs cannot tell what's going to happen the rest of the year. Let's shift gears a little bit and talk about interest rates. The Fed is scared to death of lowering interest rates right now. We thought that the Fed might lower interest rates by at least 1% this year. Right now, short-term interest rates are a little bit over 4%. As of this video, we've been buying 3-month, 6-month, 9-month, and 1-year CDs at 4.4%, which we think is a real value. The longer end, the 10-year, has been floating between 4.4, 4.5. We think it's in a trading range. But again, we think that the Fed is leaving interest rates higher for longer because they're afraid of a resurgence in inflation. And if you look at some of the Fed funds futures, which kind of tells you when the Fed's going to lower interest rates, we are seeing that the Fed funds futures rates are saying that they do not expect any kind of reduction in interest rates well into the third quarter, and not a very big one at that. So let's sum it up. We've had a huge snapback rally in May led by the large cap tech stocks. Once again, we feel that we're fully valued on the S&P 500. S&P 500 is up about 2.5% for the year. Interest rates seem to be in a trading range, but again, I want to caution investors that we believe that this is the year of the whipsaw, where market rallies big, declines big, rallies big, declines big. And if you look at where we are compared to last fall, we're at just about the same level. So let's see what happens for the rest of June and into July. We'll be back next month with another update. But again, you can get this slide deck and you can get these videos by downloading my app by texting Chris E, CHRISE to 36260. And you can download this video and download the slide deck if you want to go over it again. Again, if you have any friends or family that are interested in learning about what we do at Englebert Financial Advisors, please go ahead and forward this video to them. We'd be more than happy to talk to them. Everybody have a great rest of the month of June. We'll be talking to you soon.